Is that visible, Corin?
Yeah, that's perfect. Thank you.
Great, thank you. Thanks very much, Corin. And sure, it's always a tough act to follow, Sarah, but I'm going to try my level best. And this is actually a very brief overview of the TCFD survey results that came out earlier this year. But also, I just want to touch on a few climate initiatives that are currently underway within the Prudential Authority, and also just a couple of points on the regulatory relevance of climate risk, and perhaps maybe why the regulators are sort of looking at this with intent. Yeah, so if you are like me and probably feel a bit like my friend on the right-hand side there, but it is certainly one of the more pressing issues that we have to deal with in terms of its global relevance. So what I'd like to focus on this afternoon is obviously some background to climate risk, a couple of slides on the regulatory relevance, a brief overview on the TCFD survey rationale and the results. I think the report came out earlier this year, so I'm sure many people have actually read that report, so I'm not going to bore you with all the details, but maybe just a few relevant points. Then some of the climate initiatives that are happening within the Prudential Authority. I think it is really a very new area for the PA itself. There's a tremendous amount of learning that needs to happen. I'll touch on some of the organizations that we are currently a member of internationally, and what is currently coming into the country through those organizations, and maybe just a brief look at some of the next steps that the PA is looking at within the broader South African Reserve Bank. So I think just some background around climate risk. I suppose Sarah's obviously made the point, and I think you probably recognize that in the paper, but it's obviously recognized as a significant global threat by national governments and private sectors, public sectors. I think there's an incredible amount and an immense amount of work, and specifically policy work, that is currently underway by some of these actors and role players. We also see an incredible amount of lobby work currently occurring in civil societies. International bodies and associations. Well, I think Sarah alluded to the fact that the SARB is currently a member of the Network for the Greening of the Financial System. There are 3 working groups, of which the SARB is a member of all 3 of them, dealing with supervisory practices, as an example, for climate risk and climate change. We're also a member of the Sustainable Insurance Forum, which is also an international body of insurance supervisors that link up to discuss sustainability issues currently facing financial institutions across the globe. Typically central banks as well. I think you'll see it now with the SARB, despite the fact that it is a very sort of a nascent area that hasn't really been looked at in a lot of detail. There's certainly a lot of activity within the broader SARB and the Prudential Authority in looking at this, and also some interest from regulators and supervisors in terms of supervisory practices, etc. So just in terms of regulatory relevance, Sarah's also touched on the Financial Sector Regulation Act. I think that's obviously the lead-in to the Twin Peaks regulation. And I guess probably just to stress in terms of some of the objectives, I think the common themes that come to the fore are the stable financial system, the interests of financial customers, a balanced and sustainable economic growth, and I think regulatory and supervisory framework that promotes financial stability, which Sarah has touched on, safety and soundness of financial institutions, which are critical, and obviously the protection of financial customers, financial inclusion, and that as it relates to things like resilience in the sector, and just ensuring that financial customers have access to the system. I think these are sort of issues that are typically impacted by climate risk and climate change. Also transformation and of the financial sector, and I think confidence in the financial system, some of the highlights that are coming through from that. If we have to look at it from a regulatory perspective, this slide probably is quite apt at that, and I think we focus specifically on microprudential solvency and macroprudential solvency, and in between, from an insurance perspective, certainly the financial inclusion narrative in terms of access and affordability of insurance for consumers and the consumer protection aspects of it that our colleagues at the FSCA focus on, and specifically market conduct issues as well. I think Sarah's touched on some of the risks that were articulated in the sustainability paper, and specifically around physical risks, transition risks. I think probably self-explanatory, the extreme weather conditions that we're now currently experiencing, and the impact on insurers specifically, typically flooding, drought, the high rise in sea levels, heat stresses that we're seeing, all kind of spilling over into a potential financial impact that we see on the right-hand side. Issues that we haven't traditionally looked at, transition risks, that were also dealt with in quite a bit of detail in the sustainability paper. policy formulation in response to that, the liability risks, and I think Sarah's also touched on the issue of technology, which effectively has a disruptive effect, creating the potential for stranded assets, which then possibly flow into investment portfolios of financial institutions, which potentially have an impact or longer term impact. So we see it from a potential financial impact in terms of production and operation disruptions, supply chains disruptions, physical damage to assets, which subsequently cause an increase in insurance costs. And that, I think, speaks directly to financial inclusion and resilience in the system, the affordability aspect, changes in the resources and input prices, and changes in the demand for products and services. That takes us to the TCFD survey rationale, which effectively was set up to gather a representative view of insurers and banks' awareness and understanding of levels of uptake and implementation of the TCFD recommendations, and also to inform the IAIS and Sustainable Insurance Forum issues papers on the TCFD implementation, which the SARB and rather the PA contributed to, and typically also to raise the awareness in the industry of the disclosure regime. So as you will be aware, it was rolled out in early 2019 to insurers, and then subsequently to all banks in late 2019, with the final report published in March of 2020. I'm just going to flip through some of the results, or rather some of the, just a few slides on some of the more salient results that came through. So quite pleasing to note the response rate, even given the fact that it was a voluntary survey. I think it was quite a favorable response rate that we saw amongst financial institutions, including banks and insurers. Also a slide that is of significance is the fact that the response rate on industry participants who believe that climate change would affect their businesses. I think it's quite salient for us that industries and rather banks and insurers are thinking about climate risk in terms of a TCFD framework, and specifically in relation to governance, strategy, risk management, and potentially metrics. So it's quite encouraging to see that. From a reporting perspective, Sarah has also mentioned this. We've seen reporting in some form or another. We also see it in some of the statutory returns that are coming through. Although it's not provided for explicitly, there is a provision that is made for risks other, which I assume climate risk would probably fit into at this point in time. And just another slide on the TCFD awareness amongst banks and insurers. And yeah, I suppose just in terms of the application of the results of the survey, I think it certainly created a bit more industry awareness. It's obviously informed the Sustainable Insurance Forum TCFD issues papers, and certainly given the PA food for thought in terms of the importance of the topic and how to approach it from a regulatory and supervisory perspective. So we did indicate that it was a very useful tool, but I don't think we've actually mandated the use of it at this point in time. In terms of some initiatives that are currently underway within the Prudential Authority, I think I've mentioned this. It is certainly a very new topic for the Prudential Authority in terms of supervisory and regulatory activities. And being part and parcel of some of these organizations, such as the Sustainable Insurance Forum and the NGFS, one gets a sense of how much more advanced or how much more work has been done by international organizations. So I think to some extent we are playing a little bit of catch up. But I think we have the benefit of being members of these particular organizations, which provides us with a lot of leverage in terms of learning very quickly and very learning very quickly. So just in terms of PACT, or the Prudential Authority Climate Think Tank, this is now a body that's been established, a specific body that's been established within the South African Reserve Bank and the Prudential Authority specifically, and that's been set up to promote and develop and coordinate the PA's regulatory and supervisory response to climate risks. The team effectively consists of approximately 15 members representing a wide array of skill sets. I think the one thing that we are aware of or acutely aware of is that this is not or cannot be driven by a single skill set. So we welcome the diversity in skill sets. So we've got economists, actuaries, attorneys, a couple of data scientists there as well, all barring a climate scientist, but I think that's only a matter of time before we look to secure someone in those lines. So this is actually the dedicated structure that will now look at climate initiatives from a supervisory and regulatory perspective. It'll also drive interventions in a coordinated and collaborative way within the PA, the SARB, and with other relevant stakeholders. And I think the intent is to get out a living document or generate a living document on climate change and climate risks that will eventually inform a supervisory statement. I think many of you would probably have had regard or sight of the supervisory statement that was put out by the Bank of England. We have had extensive engagements with them earlier this year, just in terms of how that statement was set up, some of the key issues that were covered, and just some insights in terms of the process that they've actually been through to set up the statement. Another objective is obviously to enhance the corporate knowledge base of the PA from a climate change perspective. I think the one thing that I've certainly been privy to over the last couple of months is the exponential amount of knowledge that seems to be out there from a climate risk perspective, and you know, being members of these relative international organizations also kind of demonstrates how much needs to be done in terms of upskilling and in terms of building capacity within the PA. So we're looking at that quite closely, and certainly to update the financial industry where relevant on these activities and initiatives. And I think you can probably see a lot more communications coming from us next year once we get going with our statements and supervisory responses. So next steps, yeah, I guess probably information is key. Probably a lot more information gathering from our perspective and sharing of information. You will definitely see a climate survey of sorts coming out next year, which we will circulate amongst banks, insurers, and other regulated institutions, just to try and understand the climate landscape a bit better. I think data is key in terms of understanding the impact of climate risk. So certainly you will see a lot more of that coming through. And then just in terms of enhancing supervisory practices, we're going to look at a lot more interaction with our frontline teams. There's a lot of training currently underway within the PA to sort of ensure that our frontline teams are adept and have a pretty good understanding of some of these issues that are coming up with climate change and climate risk, and effectively also to communicate to stakeholders. So I think that's basically it from my side. And thanks very much.
Thank you so much, Ash. Really comprehensive presentation and a good signal to the participants on this webinar that these issues are being followed up very significantly within the various government departments and associated with the financial sector. At the moment, the focus, as you will have heard, is on the financial sector because the initiative has come from Treasury, whose mandate is financial stability. So it flows logically that the financial sector is the critical sector in this range of conversations, which is not to say that other sectors will not eventually be brought into various things, but the lead on those initiatives may well be other government departments or voluntary collaboration. I'd now like to ask Gert to speak to us about